Welcome back, and these AI powerhouses can make 100 to 200x in the coming years, and we're going to be discussing things a little bit outside the crypto markets because, as you guys know, we are now entering 2026 where crypto is the entire market cap of all the cryptos in the world combined is slightly under $4 trillion. But we're seeing tech companies like Nvidia hitting over $4.5 trillion in market cap. And so in today's video, we're going to be exploring the AI powerhouses and the pivots that some companies are making to really not only bring their business into the new technology, but also hopefully bring their stocks into massive gains that we're probably not even going to see in many cryptos as time moves forward. And so what we're going to be discussing is individual stocks that I believe are going to continue to do well, regardless of what crypto does, regardless of what the general stock market are doing, because we are seeing expansion in artificial intelligence occurring, and a lot of the topic is really on the chips like Nvidia with $4.5 trillion, the biggest company in the history of the world from a market cap perspective. And we're starting to see companies like OpenAI, Google's Gemini, XAI, all of these different AI software companies that are trying to create large language models and achieve AGI, which is artificial general intelligence. They are just the software. They're the front end. But meanwhile, to process all of the data and all of the compute for these companies and for these AI programs, you need massive, massive energy and infrastructure. And we're going to be discussing some of these stocks that are pivoting and already are there in this ever increasing and ever growing high demand, low supply ecosystem for AI. So make sure you guys are subscribed to this channel. Sometimes we talk about individual cryptos or stocks, and sometimes we talk about the macro trends that are happening in the market, which was what we're doing today. And these stocks that we're going to be talking about, I don't know what their short-term performance is going to look like over the next 6 to 9 months or 6 to 12 months or even 2 years. But what I do know is that they are entering a very low supply and high demand market. And if you guys know anything about business, when there's high demand and low supply, your prices go higher, your revenue goes higher, your expansion and growth prospects go higher. And this is part of the reason I think that we've seen Nvidia, really going to the moon. So make sure you guys are subscribed to this channel. Give the video a free thumbs up because thumbs up are free, crypto is not. And you can also check out my other videos on the channel as well. But let's get right into today's topic, which is these AI powerhouses will 100x in your portfolio. Now, before we start, it is very important that I say this is not financial advice. These are my opinions and my analysis of the market and where the market is today. Not where we're going to talk about where I think the market is going, but obviously you guys know, nobody can predict the future. But what we have seen is that Bitcoin mining companies have started to pivot in 2025 towards AI and AI infrastructure. Companies like Riot Platforms, Iris Energy, Cypher Mining, Bitfarms, and more. And we're going to be talking about a lot of these in today's video. But the reason that I am so bullish on these is more specifically because what we saw happen in 2021 into 2022, where many of these Bitcoin mining companies, they were in peak euphoria in the crypto cycle, right? And what we saw is a lot of these companies either went bankrupt in the bear market, they saw significant value destruction in the bear market, and they were not prepared for any downtrend in the cycle for crypto, which we know is a 4-year cycle. This year, this cycle in 2025, we have seen pretty much almost all of the Bitcoin mining companies pivoting some or all of their operations into artificial intelligence. And this is a very smart thing that we've seen them do. Why? Because the front end, which is Meta, OpenAI, XAI, Google's Gemini, right? The programs that you interact with, they need significant infrastructure with bandwidth connected to the internet. They need high energy, and our energy grid is just not it's not set up for that. And so the AI companies like CoreWeave are starting to soar now that they have meta deals for AI infrastructure market. And so we're going to start right here with CoreWeave. In a monumental development reshaping the landscape of AI, CoreWeave, a specialized cloud provider for AI workloads, announced a staggering $14.2 billion AI computing deal with Meta Platforms. This agreement, which saw CoreWeave stocks surge over 15% just on the news, underscores the intensifying arms race in AI development and solidifies CoreWeave's position as a critical enabler of next-generation AI. The deal not only injects massive amounts of capital infusion into CoreWeave, but also highlights the strategic imperative for major tech companies like Meta to secure vast specialized computing resources to fuel their ambitious AI initiatives. I would agree. And we've been talking about this, by the way, on my channel for well over a year at this point. And we have been watching these companies, some of which we're going to be talking about in today's video, really pivoting away from other types of businesses into this infrastructure. Because again, these Bitcoin mining companies, they already have the energy because Bitcoin mining is very energy intensive. They already need high bandwidth because they're already connected to the network and the internet. They already have the infrastructure and the warehouses for these data centers because Bitcoin mining and AI compute, the infrastructure is basically the same thing, right? You have computers connected to the network that process AI compute or mine Bitcoin. And so it's very, very similar. And we've seen that these companies, they are supplying a very high demand market right now. And the companies that are building the infrastructure, the software and the front end like Meta, they need the back end infrastructure. And they not only need it, but they need to not share it with their competitors because it's really first to market at this point, right? Who can get to AGI, who can get monetization from their AI software, because most of these companies haven't figured out how to monetize their AI, but they're always going to need the compute power of these networks. And so this partnership with CoreWeave is something that we have to really keep a very close eye on. CoreWeave, $70 billion market cap. And what have we seen the market doing pretty much all year in 2025? Well, CoreWeave, I think IPO'd at the beginning of the year. Yeah, you can see a $40 and it's already at $140. So that's basically 3.5x already. And it's probably going to continue to grow. I mean, based on this announcement of Meta signing on a CoreWeave deal, they're trying to secure their ability to utilize the compute power, utilize the energy resources from these companies to power their AI. And it's not just them. We are also seeing and hearing that CoreWeave is trying to purchase Core Scientific. Now, if you've been following my channel for any length of time, you know in the previous crypto bear market in 2022, CoreWeave went bankrupt. And we were trading that bankrupt stock because it was very clear that BlackRock wanted to bail them out, B. Riley wanted to bail them out, and they said, no, we're going to go into bankruptcy and then you can help us. And so the stock went down to 5 cents. And then now I think the stock is at like $12. Even with stock adjusted after they came out of bankruptcy, people are still making huge, huge returns on this. But now CoreWeave is trying to buy Core Scientific, right? These are two separate companies. Keep that in mind. CoreWeave is the cloud and infrastructure provider, I guess you could say, where Core Scientific is a Bitcoin mining company that also, as we know, has the ability to pivot, and that's what they've done, into AI, right? But there's a lot of tension here because one of the investors in Core Scientific is urging their shareholders to reject the CoreWeave deal. Why do you think this is? Well, they say it's undervalued, poorly structured, and insufficiently vetted. Now, my take on this is that if you're a shareholder in Core Scientific, okay, you've already seen massive growth in this stock, especially since they've come out of bankruptcy. You can see bull market in crypto. Then we went into the like corrective phase in crypto. And basically we're back to where we were almost a year ago at the end of 2024, now that we're at the end of 2025. But the difference now is that Core Scientific is even better positioned for AI, and the demand for the AI infrastructure and compute is so significant. And so if you're a shareholder in Core Scientific, I don't know if it says how much the deal was, but basically they're saying that it's undervalued. And that would make sense to me, because if you're selling the company to CoreWeave, it's a one-time deal. Or Core Scientific can just lease and rent out their compute power and their energy to these companies and make consistent profits and consistent revenue over the longer term, which, by default, especially if Core Scientific continues to grow out their AI capabilities from an infrastructure standpoint, this could be even more lucrative than selling in a one-time deal to CoreWeave. And so this is why you're going to start to see a lot more tension and inability to purchase, or for other companies to purchase these companies that have the AI compute. And so what are we now starting to see? We're starting to see companies acquiring holdings in these infrastructure plays, or just renting out their services, right? And they're basically the infrastructure play. So the AI companies need these infrastructure plays that they are not necessarily able to acquire to make their AIs run. This is like it's like oil, right? Think about it. Like, you cannot run cars, you cannot run pretty much a lot of energy. You can't get on a plane if you don't have oil and gas. And so obviously an airline, it would make sense for them to buy an oil and gas company, but the oil and gas companies are worth more than the airlines. And this goes back to selling the picks and the shovels to the gold rush. People who sold the picks and the shovels and the infrastructure to actually go and mine gold, they made more money than the gold miners themselves. Because the gold miners, they had to buy those picks and shovels constantly. They had to spend even more money on labor and on mining the gold, and hopefully they would break a profit. But the people selling the picks and shovels, they made money regardless, because you needed to buy those picks and shovels from them. And this is the same thing that's happening here. You can invest in Bitcoin, or you can invest in Coinbase. Coinbase is the pick and the shovel to get your hands on the actual crypto itself. And here, the picks and the shovels is the infrastructure, is the energy, is the compute capabilities. And all of the AI companies need it. And so that's why these companies, regardless of what crypto does, these companies that still, some of them mine Bitcoin and some of them still are in infrastructure for crypto, but they've pivoted to AI because they see this as a better play that's continuing to grow. And this is the supply and demand is not in balance right now. There's significant demand and very little supply. And that is not going to change anytime soon, in my view. Because just from the energy perspective, right, getting the power to run these machines, this can take years and years to roll out. And so the companies that have it now have a huge advantage. So this brings us to Marathon Holdings. We're going to start right here because Marathon is the largest Bitcoin mining company from a market cap perspective, but they messed up because in 2025, they started taking out debt through convertible notes and stuff like that to buy Bitcoin. And they are a very large Bitcoin holder, but again, they were buying the top of the market. And so they didn't pivot like these other companies did early on to AI. One of the companies we're going to talk about in just a second, Bitfarms. Bitfarms was one of the first Bitcoin mining companies to start pivoting to AI. And they've been doing this for multiple years now. And so they're not even, they're the most undervalued stock in this game right now. And you see the most overvalued, maybe Marathon Digital. Maybe not, because it's right now only about a $7 billion company. But what Marathon Digital has recently done is they're going to acquire 64% in this company called Xaion for $168 million in AI and HPC deal that's going to hopefully close in late 2025. This company that they're going to be purchasing 64% of is called Xaion. It's a high performance compute and AI infrastructure company. They're a subsidiary of Electricity de France, or EDF, this French state owned energy giant. The deal, valued at approximately $168 million, represents Mara's largest expansion into AI and HPC. And again, they're doing this to coincide with the end stages of the bull market in crypto and Bitcoin. And a lot of people are not seeing this. They're still focused on Cryptoviser. You got to buy MicroStrategy. You got to buy Bitcoin and Ethereum. These are going to hit all-time record highs. Meanwhile, in my view, they already did. And now they're pivoting because they understand those crypto in general is probably going to head into a bear market for some length of time. And so Marathon Digital was the largest in terms of market cap out of all these companies that we're going to be talking about today, from Bitcoin mining perspective, but it no longer is. And we're going to get into the one that is in just a few minutes here. But before we go there, I want to show you that Bitfarms was mulling a pivot to AI data centers. And keep in mind, Bitfarms is a Canadian company, but what we just recently learned at the end of 2025 is that they're opening up more offices in the United States. Over the last year or so, that they have been exiting their Bitcoin mining operations outside the United States and selling it to other Bitcoin mining companies like Hive. And they're really focused on the US, which I think is very smart, because they're using their Bitcoin mining operations as revenue and cash flow while they're expanding their AI compute and energy pipeline to expand their AI capabilities. And then by them domiciling or coming into the United States and no longer being a Canadian company, now they have access to even more liquidity, more funding, more money that is being effectively printed by the United States government to help these AI companies expand their role. Because whether you agree with it or not, a lot of it is going to be money coming from the government, because the US wants to stay ahead so that other companies don't advance even faster in the AI realm. And so Bitfarms has been setting this up, unlike Marathon Digital, jumping in, towards the end of 2025, trying to get AI and HPC deals. Bitfarms has been doing this for over a year now. And now we heard in August, Bitfarms announced a partnership with T5 data centers to advance their HPC and AI development in Pennsylvania. And so this all leads us to the price of Bitfarms, which is, in my view, one of the most highly undervalued AI plays out here. At $2 billion Canadian, it's about 1.2, 1.4 billion dollars US. Because remember, they're still a Canadian company. This is in dollars, the stock price, but the market cap is in Canadian for some reason. But we know Bitfarms has a huge energy pipeline. They already have a lot of this, their infrastructure deployed, and they are looking at potentially some of these big deals, like what we just saw with Marathon Digital, CoreWeave and Core Scientific, Meta and CoreWeave. There's huge potential here. And I want you guys to realize, if there's billions or trillions of dollars going into AI development from the government and from private investment and from all of this, and again, this is the back end. So OpenAI, Google AI, and Gemini, they're getting funded to develop the software, the front end of how the AI works. But they don't have a choice to have or not have the infrastructure. They have to have infrastructure, whether it's through a leasing deal, whether it's through buying the companies like what CoreWeave is trying to do with Core Scientific, or renting server space. They have to have infrastructure. So regardless of whether OpenAI can monetize their business, regardless if Google's Gemini can make money on their AI, these companies that are going to serve them, that are going to lease their facilities or lease their energy or lease their HPC capabilities, they're going to make money regardless. And so these companies valued at under $10 billion, in my view, they should be minimum double-digit billions of dollars in valuation at a minimum. And again, if we look at NVIDIA, $4 trillion, there's a potential that these AI infrastructure plays are going to be valued in the triple-digit billions of dollars, meaning over $100 billion. Because I want you guys to think, JP Morgan Bank is worth almost $500 billion. And what do they do? Right? What do they do? They're almost $1 trillion company. They're not providing any actual services besides giving people debt and charging people overdraft fees and stuff like that. They're not giving you any money for your money, putting your money in their bank. So why would this company be worth $1 trillion? Legacy finance, old company, younger people are just not using banks like they used to. Why is this almost $1 trillion? But the infrastructure for the future of technology, I mean, AI and HPC is really, in my view, a larger market than crypto. It's a larger market than TradFi. It's a larger market than the internet. Why would these not be in the triple digits when JP Morgan is worth almost $1 billion? And so going back to Bitfarms, this is the lowest valuation, right? Under 2 billion US dollars, but it's not the only one. And so that brings us over here to TeraWulf. Now, by the way, don't forget to give this video a thumbs up and also hit the subscribe button. That way you never miss a new video in this complex analysis of the AI powerhouses that could potentially 200x from where we are today in just a few years. TeraWulf stock gains more than 4% as Google boosts their stake in the data center operator. So we heard this in the middle of 2025. Basically, Google increased their share and their stake in this TeraWulf Bitcoin mining company that pivoted to AI to about, I think it's like 14% of the company, meaning they own 14% of the stock. And what has happened to the stock just based on that deal? Boom, straight up. Literally from $5, it over doubled in price just based on that announcement. And they're continuing to grow and continuing to expand their operations. And so this company that now has Google owning 15% of the company for their AI capabilities, under $5 billion market cap, under $5 billion. And it just doubled. So it was $2.5 billion. Where do you think this is going? As more and more companies are going to be doing deals like this with the Bitcoin mining companies that pivoted to AI to utilize the resources to power their AI products. These companies literally have no ceiling, like at all. And they have a backup business, which is Bitcoin mining, so they could still make other money on the side. These are the plays, guys. And to think that these companies are not going to go into double or triple digit billion of dollars of valuation, I think is really not being able to see the future, and probably shouldn't be an investor if you can't see that. And that brings us to Hut, right? Hut is another company. Hut 8, this was from August of 2025. Hut 8 breaks ground on a $2.5 billion AI data center in Louisiana. So this is happening everywhere. The company is working with Entergy to prepare the substation and switchyard at its Riverbend site, a 611-acre parcel. Parish officials approved the project, projecting thousands of construction jobs and more than 50 long-term technicians and maintenance positions. The first phase will produce two 450,000 square foot buildings. And this is all going to be for AI compute. And so let's look at Hut Mining, Hut 8 Corporation, right? A Bitcoin mining company. And what's it been doing in 2025? Going straight up from $10 to $30 or $40 almost, basically, at the top. And this company is only basically under $4 billion valuation as well. They're building a $2.5 billion site. and their market cap is basically less than double that. And what do you don't think that companies are going to be signing on to this, that they're going to be like signing these hosting agreements? Of course they are. That's what Google is doing. That's what Meta is doing. That's what NVIDIA is doing. CoreWeave is doing. Like we just showed you that at the beginning of the video. But people are so focused on Bitcoin, on crypto, on Ethereum, on Bitmine, on MicroStrategy. They're missing the pivot. When you see these pivots, you have to pay attention because this is where the money is going to be made. Google, again, also is taking a 5.4% stake in Cypher mining in a $3 billion deal. Google acquired 5.4% stake in Bitcoin miner Cypher mining by backstopping $1.4 billion of Fluidstack's obligations in a $3 billion 10-year AI center deal. So Google is now partnered with TeraWulf and Cypher Mining, providing billions and billions of dollars for growth, for expansion, and for purchasing shares in the company. And there's people who are saying, but Cryptoviser, I don't know if this is going to continue to grow. I don't know if this is a safe bet. Or Cryptoviser, why don't you focus on Bitcoin? This is where the money is at. And I think that there's going to be a lot of people making a lot of money on these companies over the next couple of years. I think that's just the beginning, guys. It's just the beginning. Google, Meta, CoreWeave, they're getting involved right now. Think about all the companies that are working on deals right now, working on growing their AI facilities out. And so look at Cypher Mining. From August, $4 all the way up to 200% gain in just basically a month based on these deals. And it's under $5 billion valuation. So the idea that they're not going to continue to grow at very, very rapid paces, that these companies are not collectively, all these companies together that are powering AI for the nation and potentially the world, they're worth less than JP Morgan, which does basically just gives out debt. They don't do anything for you. You don't gain anything as a customer from them. But they're worth almost $1 trillion. Now, I'm not saying that their valuation is going to come down. I don't know, because their valuation keeps going higher. But with the expansion and growth and beginning stages of AI development and AI implementation, it seems very clear that these companies collectively are going to rapidly grow in their valuations, in my opinion and analysis. I could be wrong, so do your own research. This brings us to Iris Energy. Renewable energy's role in AI data center grids, the Iris Energy CEO explains. Now, before we go there, I just want to show you Iris Energy is basically becoming an AI powerhouse on the Bitcoin Foundation. For Iris Energy, the story is no different. With a year-to-date gain of over 380%, the company's captured the market's attention, but reasons extend beyond the price of Bitcoin. Investors are witnessing a calculated transformation as Iris Energy leverages its industrial-scale infrastructure to pivot aggressively into the booming AI sector. The market is beginning to recognize Iris Energy is no longer just a crypto miner. It's rapidly evolving into a diversified technology company and a critical supplier of high-performance compute power that fuels the AI revolution. And so the primary catalyst for the reevaluation of this company was a landmark announcement in September. Iris intended to double its AI cloud fleet to approximately 23,000 GPUs through a $670 million procurement. Now, so they're expanding their AI operations. That's the bottom line, right? And Iris Energy is now worth almost $13 billion. They haven't even done it yet. They haven't even done it yet. And the price of the company from August till basically October, 200% gain. They haven't even done anything yet. They just made the announcement. And so they're building this, but they're not just building it. They're building it for another company to then go and use their AI capabilities. And this goes for all the companies that we just discussed. Bitfarms, Hut 8, TeraWulf, Core Scientific. And they know there's going to be companies that are going to use their compute. That's why they're building it. And so the Iris Energy co-founder and co-CEO highlighted the role of renewable energy resources and how they're playing in his grid facilities that power AI data centers. And you can watch this whole interview. It's on Yahoo Finance. We're not going to watch it on today's video because this video is really about understanding this market right now. I don't think I've ever been this bullish on individual sector of the ecosystem in stocks, because many people missed Bitcoin, right? Nobody bought Bitcoin at $1, right? Probably many of you haven't. If you did, you're probably like living on a yacht somewhere, right? In the Caribbean, or I don't know, in Italy or something like that. But people are still chasing those gains from Bitcoin going from $1 to $60,000 or $1 to $100,000, right? Those gains are not coming again in crypto, generally speaking. So you have to look for what's the next thing, and it's AI. And really, before these infrastructure plays, there wasn't a way to invest in AI. Like, you're going to invest in OpenAI or Google's Gemini. Like, those are plays, but that's not even the play, because they have to spend a lot of money to get to where they want to go. So the picks and the shovels, I'm so bullish on them. Bit Digital. This was a Bitcoin mining company. You guys know Bit Digital recently made the pivot to Ethereum, right? So they sold their Bitcoin, sold their mining operations, and they went into Ethereum because they can get a yield on staking Ethereum. But they also had an offshoot called White Fiber. The AI infrastructure company White Fiber began their IPO rollout. Now, White Fiber is already a company here. It's already worth $1 billion. You can see the stock went from IPO at about $15 to about, where we are when I'm recording this, almost $30. And it's $1 billion valuation. Well, what is this? White Fiber filed to raise $100 million in a US IPO. The company targets the booming AI infrastructure market, leveraging Tier 3 data centers and proprietary GPU management software. The IPO proceeds would fund new data centers, equipment, and expansion, while parent firm Bit Digital will retain 80% voting power, making White Fiber a controlled company. But they're being controlled by Bit Digital, which pivoted to Ethereum because they realize Bitcoin mining, it gets more difficult. You have to keep buying new machines, and the amount that you actually mine becomes less and less. Some people say that's a feature, not a bug of the Bitcoin mining space, but that's also why the price of Bitcoin over time will go higher, because the cost to mine continues to increase. So that's also a dynamic at play here. But what we're seeing is the institutionalization of Bitcoin, where Bitcoin companies are becoming more centrally owned and centrally operated. And the amount of money to be made there is becoming less and less because there's more players in the game. That's why a lot of them are moving to Ethereum, because they can earn a yield with staking, and AI and HPC because they're the picks and the shovels. And they don't really need to do that much to transform a Bitcoin mining facility to AI facility. It's just the hardware. But everything else they have the energy, they have the facilities, they have the employees, they have the infrastructure. So White Fiber is one to watch as well. And their parent company, Bit Digital, is also going to benefit as well. Bit Digital market cap, think about this, guys. Bit Digital's market cap is under $1 billion. They own White Fiber, which is $1 billion. The AI play is worth more than the company that owns 80% of the voting power for White Fiber. Think about that. So maybe the play is White Fiber versus Bit Digital. But either way, if we get to a $20 billion valuation on White Fiber through its AI expansion and potential deals with major companies, that's a 20x. If we get to triple digits, that's a 100x. And I'm not saying this is going to happen. I don't know. I can't predict the future. But just seeing where AI and HPC and the picks and the shovels for AI is going, these are the plays. And so if it does go, and I'm talking about over many years, right? Getting to $100 billion. This could be 4 years, 5 years, maybe 10 years, maybe even less, depending on how the AI sector evolves. We also see that Hyperscale Data is upgrading their Bitcoin mining fleet as their Michigan AI campus expands. So Hyperscale Data, this is a smaller company. They announced a strategic upgrade of their Bitcoin mining fleet at their Michigan facility, implementing new Bitmain Ant miners that offer 235 terahash per second. This 617,000 square foot facility spanning 34.5 acres will ultimately combine Bitcoin mining operations with NVIDIA powered AI infrastructure. The company plans to retain all mined Bitcoin retain all mined Bitcoin as part of their digital asset treasury. And let's take a look at this company. Hyperscale Data, $32 million. Now, I don't know I don't know too much about this company, but if you believe that they are going to expand their AI operations while holding on to their Bitcoin operations and their Bitcoin like that they mine, this is a potential like long shot play here. Because if they're able to scale, which I don't know, I would have to go look at like SEC documents and stuff like that, going from a $31 million valuation to a $1 billion valuation is like a 40x. I'm not saying it's going to happen, but it's definitely possible. I mean, look at the stock price just since 2021. I'm guessing they went through a few different stock splits because it's showing $1 million back then. I don't know about that. But yeah, I mean, this kind of sums up my analysis and belief that there's highly, highly, highly undervalued stocks here in the space. And I think that the AI HPC game is going to do better than the crypto game moving forward in terms of percentage gains. And we see that from the market cap of crypto being lower than just one company, NVIDIA. Anyway, let me know what you guys think about this whole analysis of the AI powerhouses, my predictions that we will potentially see double-digit to triple-digit billion-dollar valuations in these AI infrastructure plays. Don't forget to give the video a free thumbs up, hit that subscribe button on your way out, and look forward to reading your comments. As always, crypto on.